Is AI coming for your job? Is it coming for my job? Can it make a better podcast than Beckonomics?
I hope not.
Well, today we're going to take a look at, what AI kind of can and can't do and what the real implications are for the labor market. There's a whole lot of fear out there that as AI becomes more and more advanced, that's going to start replacing people. And, that's true to some extent, but I think the main takeaway to kind of give the plot away ahead of time is that it's really going to augment how we work more than anything else.
Definitely. And I think we should dive into, the history of what technology revolutions have really done for the job market. But first, Hunter, I want to congratulate you. You just got your CFA. You're officially a charter holder now. So congratulations. That's a lot of work. So we've got a couple CFAs on the podcast now. That's pretty exciting.
Yeah. Thanks, Victor. I think it's a cause for a rebranding to the CFA bros or something. But we'll play with that one later.
Exactly. Yeah, I know that's, probably 1,000 hours of studying across those 3 tests at least, and a lot of hard work. So congratulations. But yeah, getting back to our AI conversation, technology has always disrupted the job market, across periods of history. I think in at least modern history, it kind of really started with the Industrial Revolution. I mean, we could go back to when the wheel was invented in ancient Mesopotamia, but that's probably a little less relevant for our conversation today. But, as far as the Industrial Revolution goes, with the advent of, the steam engine, with mechanized manufacturing, it really replaced a lot of very manual kind of textile jobs. It allowed people to produce garments much, much faster than it did historically. And the worry back then, you're talking about 1800s, was, hey, am I going to have a job? Because now we don't need to weave these by hand anymore. Well, obviously that wasn't the case. Jobs change. And then the next kind of advancement in technology was really the internal combustion engine. You had the advent of the automobile. And so that, of course, hey, buggy whips, buggy whip manufacturers, buggy drivers, were they concerned all of a sudden? The people who were taking care of the horses driving the buggies, they're wondering, hey, am I going to be out of a job? Is this going to change my life? Well, of course it shifts things, but the economy continues to develop. And then also, with the advent of the automobile in the early 1900s and the internal combustion engine, we saw that, hey, that replaced carriage drivers, it replaced buggy whip manufacturers, but those jobs just had to shift into the automobile industry. And so the economy is always changing. Also, with the change in manufacturing processes, Henry Ford's assembly line really created a difference from what was, end-to-end production of some kind of product via a craftsman, now turned into an assembly line where you're focusing on one part of this process, you're able to repeat it efficiently. And so I think throughout this conversation and throughout history, it's more about those efficiency gains rather than, hey, you're totally, displacing people out of their jobs.
Yeah. And this is something we see time and time again. Same thing in the late 20th century into really the dot-com boom and everything that came along with it. You have the advent of computers, people working alongside robotics increasingly, and then really into the early 2000s where you have Excel, for example, on its own probably replaced, millions of jobs, hundreds of thousands of jobs at least. But all of these things shifted from, data entry and bookkeepers to new, similar related roles that are just augmented by this technology and make people more efficient and also spin off plethoras of industries. We wouldn't be sitting here right now making a podcast today if it wasn't for that advent. And that's something that people, 100 years ago, doesn't exist to them.
Exactly. Yeah. I mean, it's very exciting because I think that the fundamental lesson here is that with new technology becomes kind of an elevation of job roles. It makes things a little bit more technical, a little bit more hands-on as far as from an interpersonal perspective. And so I think what our listeners should come away with from this conversation is, hey, don't worry about this, coming of AI, this coming of robotics that's going to completely displace you from your current job. If anything, it's going to make your job a little bit more challenging in some ways, but also more efficient and easier in other ways. Because 100 years ago, there weren't many people who had the benefit of being able to sit behind a desk and do a job, whether that's a positive thing or not. But the stress of daily work is much less than it was before. And now with AI implementation, robotics implementation, it's making jobs easier, more efficient. And so humans may eventually just end up working fewer hours rather than really just not having a job anymore, or working in areas where you're, working at higher level thinking, whereas AI can take care of a lot of the mundane tasks that you don't really want to be doing in your job in the first place.
Yeah. And I think really like picking up on something you said earlier is that human interaction there are plenty of industries that could be replaced right now. I like using the example of like bartenders. No offense to any bartenders out there, but we have machines that can mix you a drink. But a lot of it's that experience. It's that, talking to somebody, really interacting with people on that social level. And that's why more and more nowadays you see on like resumes, on job applications, it's that demand for interpersonal skills, because we've automated a lot of the mindless stuff, and it's really that kind of interpersonal skill that people will always have a demand for.
Right. I mean, yeah, to your point about bartenders, I think people are less excited to go up to a vodka soda machine or a, rum and Coke machine and like a soda machine, rather than have that interpersonal connection, be able to, talk to who they're working with. I think when it comes to our industry, one that's become very big is these robo advisors. So are you going to work with a robo advisor? Yes, it may be cheaper because it's a computer running it, but the results from the investment process that these robots are at least so far following haven't been, very impressive. If you're talking about trusting someone with all of your wealth, you probably want to talk to another human being who has that shared experience, rather than an algorithm that's saying, based off of your life scenario, this is the best option for you. And the beautiful thing is that, going back into how these things are being woven into our jobs, it allows us to be able to use tools like that to help, get a starting point or get some input that we may not see from a technical perspective, but then be able to apply that human touch, that human interaction that's going to be that critical piece of working in any job that really involves, person-to-person connection.
Yeah, and I think something important to highlight here is that so much of it is, you're talking working fewer hours and just kind of changing a lot of dynamics going on in the job market, is all of these things are enhancing our quality of life. Things that we take for granted today, refrigeration, air conditioning, all of these things, there is a certain point in time not that long ago that these were true luxuries that, even the wealthiest didn't have access to. So, that's one of those things. And then with robo-advisors is it does provide the benefit of expanding access to this. If you have $5,000 in an account, it's, we have a minimum at Bet Capital Management because it's hard for us to really build a full portfolio and do all of the interesting things that we can do, all of our capabilities, with less than, $250,000, say, or whatever your threshold is wherever you're working. But, it allows people, expands that access to people with $5,000, $10,000 to get started, get some kind of advice, so they're not really just out there on their own, and feel like they can actually get a little bit of customized, attention from an AI bot versus just going at it themselves.
Right. And I think what we're going to see, and I think this has already proven to be the case kind of coming out of COVID, but there's going to be this renaissance probably for this interpersonal connection piece. So whether you're working with a therapist or, a financial advisor or someone who's, more hands-on working with you, I think you're going to want that interpersonal connection a little bit more. We saw that humans are, community creatures, where in COVID, you had all these technological products come out, whether it's Zoom, chat functions, other kinds of social media, things that we may still be using in our day-to-day work or life, but it hasn't replaced having a conversation face-to-face. It hasn't changed the fact that we want to talk to another human being when it comes to getting some kind of advice. Because yes, you could say, hey, what's the most efficient option for me? Or how do I solve, my internal dilemmas or my problems? Or how do I invest for my future? But sometimes it's not very satisfying to get an answer spit out by a robot. And so I think what we need to focus on is the fact that it's just helping us be better at our jobs rather than completely displacing a few. Now, I do think it's worth talking a little bit about how it will fundamentally change some jobs. You and I were talking before this about, hey, which jobs could it actually completely replace? I think the autonomous driving piece is something that is worth focusing on because there are so many people involved in the Uber, Lyft kind of gig economy, but then also trucking and shipping. And so I think those are ones that are going to have to pivot. But, like I said, going back to the carriage drivers with the automobile, it's going to change the way that they work. And there are going to be opportunities likely that we may just not be conscious of yet.
Yeah. And then taking a really recent example, like you mentioned, the trucking, the shipping, is the port strikes that were just resolved not too long ago. Is, their big fight right now is automation. And that's a big fear for people, very similar to the AI thing. But, kind of some, silver lining there is that to take an example from the West Coast, their ports are increasingly more automated than on the East Coast. And just putting some numbers behind it, they've had a 13% increase in workforce in the last 5 years over there. And that's after really kicking that automation initiative into high gear. And so it shows you that, the job mix will shift, like you mentioned, but there will be more opportunities because now you're importing more goods. There's more throughput. And so that's always going to take somebody somewhere along the line to manage. And so it's things like that where that kind of change is scary for people, especially ones that are at risk of losing a job or, having to shift. But time and time again, we are seeing that there are opportunities that come along with this.
Right. So ideally, it's making life easier, your job's more efficient, and it's going to open up more opportunities, which are hard to see when you're working a specific role right now. Now, kind of moving on, I think you and I, and as a part of our investment team at Beck Capital Management, we really look at our investment philosophy through this 30,000 foot view of the world. So I know we always kind of like to start with a macroeconomic picture. What does it look like from an economic perspective, kind of in the United States, but also internationally? And how does AI change that when we're talking about the job market? Well, I think a big piece of that is the demographic changes within the United States. Right now, we're not at replacement level as far as birth rate goes in the US. So efficiency, productivity are extremely important. So whether that's either replacing or, improving, making more efficient some jobs with AI, with robotics, that's going to become critical because if you want to keep growing your economy, you either have to have more people purchasing more things. And if you can't do that via population, like a country like India, who's seen a huge population explosion driving their economy, if you're a Western country like the United States, many parts of Europe, who aren't necessarily growing their population substantially, then you're going to have to do that through technology, through productivity. So AI is going to be really beneficial when it comes to helping the economy grow in a way that doesn't necessarily just mean increasing your population. Of course, along with that, I think immigration is going to be important. Having quality workers in countries that may not have access to the technology and jobs elsewhere that can come into the United States can help. But I think that combination, making up for the fact that we're not really actively growing our population in the US, is going to be big for the economy moving forward.
Yeah, no, definitely it is. And, kind of taking a look at where we're at currently with the AI replacement is that AI is still very much in its infancy, but you've probably seen now there are AI chatbots on most every website that you go to. There's some kind of ability to, help you with common questions and stuff like that. That's a little bit better than your old search bar kind of thing. And so it's making its way into the market, but the labor market's still really strong right now. Unemployment's low, and we don't really expect that to change at all as jobs are augmented further and further through AI.
No, absolutely. And I think that as far as the broader economy goes, global economies, AI is just going to be one of those things to help boost productivity, increase, like you brought up earlier, quality of life, quality of living. Hopefully people are working fewer hours, get to enjoy more. And that's the, goal of a properly tuned, capitalist system. And so I think going from there, the way that we're looking at it from an investment process is really right now. I mean, this goes back to our last conversation, our last podcast about AI, but is looking at who's going to benefit from this technology. And I think first, it's still going to be those chip manufacturers. And then what do chips need? What do robots need? They need electricity. So that combination of those two things, I mean, we're looking at, especially on the chip side, companies that can drive this data processing power, who are capable of driving these large language models, of the productivity models that all of this AI runs on. I mean, it's super data intensive. And so, investing in the companies that are helping push that forward via data centers is really important.
Yeah. And like you mentioned, those secondary companies too, the power generation has turned into a much larger issue than people were really thinking about at first, just because of the scale at which, this AI adoption has taken place. And so, especially in the modern day, you have these hyperscalers like your Microsofts, your Amazons, your Googles, and they not only have a bunch of money to pour into AI, but they also have very specific laid out climate goals and initiatives where they don't want to just turn on a coal power plant to power their data center, because that kind of goes against their ethos. And so you're seeing a lot of excitement right now in the nuclear space. We've talked about this on previous podcasts, what we're kind of looking at there, who the real players are in the nuclear space, but having that 24/7, 365 baseload clean power is a huge deal right now. And so just recently, there have been a few announcements about these companies, investing in small modular reactor companies, something that really hasn't been built anywhere. I mean, we have 2 small modular reactors in the world, essentially right now, a few under construction, none in the US. And so this is some big steps forward as far as that technology goes. So that's something we're really excited about, really looking at closely, and, just keeping an eye on there.
Yeah, I mean, hopefully some people are listening to our podcast, because when we were talking about electric opportunities on our podcast, a few weeks back, that was right before we had this huge rally in nuclear stocks and electricity stocks and utilities. Of course, utilities still the best performing sector of the S&P so far this year. But I mean, we've really seen huge growth over the last few weeks just because of this excitement behind the data centers, behind these hyperscalers investing in these electric generation projects. And I think this is the fun thing about investing, right? It's following the macro view, seeing where dollars are flowing in the world, and then following it all the way down the chain. So you start with AI, you have this kind of big pie in the sky idea, and people are doing some things here or there. Well, hey, let's drill down into that. What powers the AI applications? Well, it's these chip providers, and those are the ones who are pulling in the checks right now. Well, what do the chip providers need? Well, they need data centers. They need electricity. And so that's what the data centers need. They need electricity. Well, where does the electricity come from? Well, it comes from the utilities and the power generators. And what do they need to build out the grid? They need components. They need inverters, transformers. And so I think following that chain, and then once we identify those companies that operate in those spaces, doing what we're trained to do from a financial perspective, that bottom up analysis where we're diving into the numbers, that's where our nerd glasses go on. And we just are really getting after it as far as, hey, is this company profitable? Are they growing their earnings? What do the intra-company dynamics look like? And do we like them versus their competitor as far as where we're going to invest?
It is a really exciting time right now to see going beyond just your big players, your big AI names that just stole the scene for so long. And now people are focusing on further down the chain. Where's that electricity coming from? And it's kind of hitting the markets in the face of, oh my gosh, that's a problem. Electricity usually grows at a very slow, stable rate. And then all of a sudden there's this huge demand that's, really unprecedented in recent history that no one's expecting, just kind of out of the blue. And so then it's a real problem that, as soon as you have Google and Amazon, companies like that throwing and pledging hundreds of millions of dollars towards these projects, all of a sudden the market wakes up, pays attention, and, there's that excitement starts building around them. And there's still a lot of really cool technology, like software side companies that we're looking at right now, but they're still the ones investing in this, building out their capabilities in preparation for, they're still writing the front of the checks. Soon, hopefully they'll be signing the back of the checks.
Exactly. And so kind of returning to the top of the episode, I think if you're in a job, in a position where you think AI may be capable of taking it over at some point, don't worry too much. These things tend to develop slowly. I know it seems like everything's rushing at, a rocket's pace right now, but these are going to develop over time. I mean, we saw the internet take a long time to really start to displace brick and mortar retail. Pump the brakes, take a deep breath, and realize that if anything, at the end of the day, hopefully this will just make your life better, make your job easier, and everything become more productive.